Just Chase, Anthony Joseph, Prime Stay, Holiday Homes. Most awarded agent in Dubai, his name is Anthony. Portfolios he's scaling really high, that's why they can't compete. The first time that he came out to Dubai, he didn't have a thing. Now he's out here changing all these lives and it's a masterpiece.
New episode with our favorite Dr. Anand. Dr. Anand, yesterday Sheikh Mohammed has did an announcement of the 10 years residency, the blue visa.
Correct.
That will it's gonna be presented to people who make exceptional contributions towards protecting the environment. I tried to do a bit of search, couldn't find much information, so I'm like, let me come for the source.
Yeah, why is it
You're
that
the
I have
fountain
to be
of
the source for
information.
everything?
The fountain of information.
Okay.
Tell us about it.
It's true that since it was just announced yesterday, there is still not much information, but it's a very, very positive announcement. And we need to understand the thinking behind the government here. Sometimes it's not just the initiative, it's the intent that really matters here. You see, when we did COP28 in December of last year, there were multiple initiatives that were announced, and there was going to be a future drive for sustainability and zero carbon footprint by 2050. And part of that we have already seen as announcements. We've got the Dubai Reef, we've got the mangrove trees that are coming up, and all of this lining up with the 2040 master plan. Now, in addition to this, the blue visa has been given for two reasons. One, the UAE has been one of the leading countries driving sustainability, creating healthy ecosystems. We saw the dark sky policy from Abu Dhabi, which we talked about last time. So to recognize these people who have been here actually helping us with the environment, protect the natural reserves, this is an initiative as an encouragement that these people, we would love you to be with us here because the future is all about sustainability. Additionally, why this is a perfect timing for it is with the announcement of the 2033 plan and the 2040 plan, there is going to be aggressive development in Dubai. Aggressive in terms of entire cities are going to be built, waterfront as well as into the desert. The airport is going to be a massive construction project there. So none of this can be achieved without some cost being paid for by the environment, by the ecosystems. And Dubai, recognizing this, has taken this initiative saying, let's bring the best on environment, sustainability, ecosystems from the world. Let's bring them into Dubai, because these are the kind of people who will help us in our strategies so that while we are going ahead and becoming the best city in the world, we are not going to damage the environment, and we are going to be responsible for that as well. It also helps us for real estate in particular, because real estate is going to be a very, very aggressive contributor to the infrastructure for the economy to double. So more eco-friendly buildings, less carbon emission, type of material that is going to be used, design of communities to be able to handle waste management, electricity, solar paneling, and all of these will become even more critical. The millennials of today, the children of the future, are extremely concerned with the quality of life, the quality of air, also in terms of what they're exposed to when they're inside these man-built structures. So it becomes really important that along with giving the message to the world that we are going to be the number one city, we will also make sure that the kind of environment that you will bring your family and live in it will be number one on the planet as well. So it's a perfect thing to do right now, because we see this huge pressure on the ecosystems coming in the next few years. So you start early and you bring people in so that all projects now will be designed to be eco-friendly projects. And I think it's an absolutely positive initiative.
Just got an idea. I think the next episode we're doing, we should make it specifically for the types of visas in Dubai, because there is over 10, 15 types, and
There are
people
a
need
lot.
to know it one by one. There is even a retirement visa that people got surprised when I mentioned it to them. So on the next episode, we're gonna do one specifically to those. Doctor, coming back to the economy, the most common question I get asked is like, how do you know the liquidity in the city?
Okay, great question. Now, this should be looked at from two different perspectives. First thing about liquidity is how much money actually exists within a city in terms of investment and the opportunity for these investments to grow. Because you're not liquid if you're putting money and you're losing it. And we already know that we have the strongest economy in the Middle East and the second strongest in the world.
Correct.
This year, our GDP projection is 5.1%, where Saudi Arabia is 1.5%. The entire Middle East is on a 2.6%. So we are double that. So we do have a very strong economy. We just had 2 days ago, another announcement came out that the foreign direct investments, the greenfield investments, we were number one for the whole year. We were number one for the first half of last year. We became number one at the end of the year, and we had Singapore number two and London number three. So these are mega investment opportunities where there's we're talking billions and billions of cash that's going to be coming in from global companies. The heavyweights are coming in. So there is a lot of money coming in. Our economy is geared to double from the 14.6 to 26.2 trillion. 3 new business corridors have been opened into Africa, Latin America, and Southeast Asia. We have 400 cities coming onto our map. We are doubling the foreign direct investment. We've already seen 1070 greenfield investments. Maybe that's another one we can talk about next time. So it is a clear indicator that the biggest companies on the planet are putting their chips on Dubai. And they're coming in, and we already have such mega projects that Singapore's at 400 plus. We are more than double of Singapore in this, and Singapore's number two. So the liquidity comes from a strong economy, from a growth-oriented economy, from a clear strategy that is attracting these mega investments into the city, from a high-performing investment city that brings liquidity. The second side of liquidity is understanding the ease the ease in terms of how transactions happen in the city. So, for example, any industry, there needs to be a healthy supply, but also a healthy demand. Otherwise, you cannot have the transactions in volume, which means that's a low liquidity market. So we need to have both. In Dubai, as we can see, there is a lot of supply coming in, but there's a heavy demand as well. And we are actually seeing the transaction volume. Other thing about the liquidity is one, not just the volume of transactions in the city, it is the ease and the speed with which this happens. So for example, I could be in a particular city where there are a lot of opportunities, but if the taxation policies are not friendly, if the money governance is so strict that it's not easy for people to bring, we want the governance. But at the same time, we want to allow people channels, legal channels through which they can bring money in. So when we don't provide those in a city, while opportunity may be there, it is not easy to transact. So the ease of transaction, the speed of the transaction, supporting the demand for it with the supply will tell you that your city is in a very healthy liquidity situation. That's where Dubai sits today.
People want to look research online to see what are the volume of the cash being circulated in the market, not only in real estate. Is there any reference of places where they can find this information?
This kind of information is hard to get about any city on the planet because it's a number that is constantly changing. It's very, very dynamic. And I personally haven't seen myself, but that's a great question. Let me do some research this weekend.
Amazing. Doctor, speaking, we're gonna stay in the same category and we're gonna speak about the IPOs. A lot of people are asking recently why we are seeing this many companies getting listed and on IPOs and selling their shares. Can you explain to us, first of all, the concept and why this is happening?
Okay. The IPO, initial public offering, is not a new concept. It's been around for the last 50 years.
Yeah.
Okay. But if you look at the history of IPOs, it was always world-class companies, the mega giants that went for the IPOs. It wasn't the small players that got into it. And the reason for this is clear.
I'm sorry to cut you off, but if I'm not mistaken, a value of a company should be minimum $500 million to be listed on exchanges,
on
right?
any exchange, yes. And they should have provided 7 years of audited statements that have been gone through. And there are multiple layers of auditing that goes through it. Insuring, reinsuring, triple insuring, so that the assets of the company are actually protected. And it is not easy to list on the top exchanges, right? So the first thing that happens is we look at which type of companies are getting in there. These are either global companies or regional multinational kind of companies are coming in, large local corporates. It's not that these people cannot have another access for the money. The first thing that people need to, and IPO is not a merger. It's not someone joining you. It's because you don't have the funds. You are creating new funds for expansion. And there are three ways I can do this. One, from my own natural reserves, I can actually float an expansion. But there is the highest amount of risk attached to that because the buffer that you have to fall back on is going to be very weak. Exactly what happened with Neom. The PIF, the Public Investment Fund, has dropped to 15 billion when they need 500 billion. So they don't have the reserve. So it does not make sense. Most of the large companies will not do that. The reserve has to be kept because that is the strength on their balance sheet. The second way to do it is either we can approach banks or financial institutions, large funds to bring it in. The process for that is extremely complicated as well. And the costs of getting that is much, much higher. The payout terms are agreed on fixed terms over 10, 15, 20 years. And so therefore, regardless of how the business is performing, you have to be able to honor those payments. So that puts you under business pressure. And you might be taking an IPO to completely diversify into an entirely new vertical of business. Therefore, we are not clear how many years before you can really start making good money in that. So you create a higher potential for liability for yourself in that. The third, which is a bit more easier, is by going, because there's a lot of cash in the world, right? When you go out into the world, raising the money is not the issue. What you need to do is to be able to position your company that it has the credibility to get confidence from these people around the world, so they'll put their money with you.
It's like the bonds. You have Class A bond and then you have the Class C. The Class C will pay you 50 times more, but the risk is there.
Absolutely. So the first thing that happens here is to get the IPO, you have to be listed on an exchange. Now, to be listed on the exchange, you have to meet multiple criteria. So if I've met the criteria, there is a confidence statement being made to the market that I am that kind of company. Secondly, I have to be completely transparent with all my records, financial data, business plan, strategy, all of that needs to come out. So there is a confidence through which I can get the money in. Also, the returns that I give out, I have a bit more flexibility because if the business takes a little bit of time, I'm sharing percentages of my profits with my shareholders. So if the profits are low, then the payout to the shareholders is also low. So I'm protected against those large, heavy payouts that I have to do when I go to financial institutions. But at the same time, there is incredible opportunity because the kind of companies going for this have got clear plans. They know why they're getting into this. So it's a win-win for everybody involved. Even the people who become shareholders in the company, absolutely brilliant. I was just reading a social media post today. It was crazy. I forgot the name of the guy. I'll find the name and send it to you. He had 10% of shares in Apple many years ago. It was worth $800. It's $386 billion today. And he sold it. He sold it at that time. He's probably one of the people with
He's not alive anymore. He committed suicide
he
for
probably
sure.
has the biggest migraine on the planet. So these companies know where they are going with this. So it's a huge opportunity for someone who may not be able to put large amounts of money to make returns, fairly decent chunks, and you can double it, triple it easily depending on the kind of company who's giving you the IPO.
All right. I hope this is clear for everyone that when companies get listed, they are raising money to expand the business. It doesn't mean that they need money because they're going through financial difficulties.
Absolutely.
We've been hearing a lot about the Feds dropping the interest rates from the beginning of the year, saying we're controlling the inflation, we're gonna drop it. Then a month after, they say, no, actually, we haven't controlled the inflation and we're not seeing any movement. But let's say that this scenario will occur. Let's say they will drop the rates. What will this do for the price of the property?
It's going to go up.
It's going to shoot.
100%.
Because now already we are selling like crazy with this rates. So when the rates will drop, the properties will shoot. This will be healthy for the market or not?
Healthy for the market because the demand in the market is what keeps the market healthy or not. So it has got nothing to do with the interest rates. We have seen in the last 2 years with so many, nearly 10 times the interest rates went up. It didn't slow down property at all. And that wasn't because of the interest rates. It was because of the demand and the future plans in the city. So that is what drives the prices up. Now what will drive the prices up is besides the aggressive agenda, now loans or mortgages become easier because the interest rates will be lower. So when that happens, more people start thinking of taking the mortgage now. They were holding back earlier. Therefore, there are more buyers in the market for properties because now the mortgage is looking more friendly. And when that happens, naturally, the sellers or the ready homes, they also start to increase their prices because there are more people willing to take the mortgage at lower rates of interest. So it's a paradox, but the
With
prices
this
will go up.
scenario happening, properties going up, now any tenant can be a landlord and the interest rate will be easier.
Yeah.
I'm thinking about developers. How can they compete? They need to be more flexible on their payment terms.
Not
Lower
necessarily.
down, let's say we're talking about the 1% developers, all of those. Okay.
Yeah.
With that happening, these guys need to do a better offer to still capture that huge market share.
Not necessary, because remember, the personality of the product is very different. We're talking two completely different products, two completely different types of buyers. The ones who go to take the mortgage are preferring to go for homes that are ready or close to completion. So it's more of a homeowner. That is not an investor. Investors will lose on a mortgage. We know that for sure because they're taking it when the building is almost complete.
Yeah.
They're already paying a very high amount. And then on top of that, there is an interest. So those are the homeowners. The developers are coming with product which is not attracting homeowners to start with, unless you come with something iconic and someone picks it up as a trophy home, but that is not driving the market. So when the developers are launching, it is primarily investors who are coming in still. They are not impacted by the interest rates because the homeowner is going to come up 3 years later on that. So it will not impact the developer from that perspective. Even the 1% plan, I know a lot of people who are now buying their home saying, I don't mind, I'll rent for couple of years more. After handover, I still have a 5-year post handover plan. So for those kind of people, again, it is a lot more attractive because you have to keep in mind, it is not just the interest rate that I have to worry about, my credit rating. I've got already loans. If I'm the kind of guy going, the 1% plans are typically on the smaller value homes, 800
Million and under.
those kind, yeah. So what happens for this kind of a person who's looking to buy? They already have got a lot of financial liabilities, credit cards, personal loans, car loans and stuff like that. And there's a cap. You cannot recover more than 60% of a person's salary. So a lot of this is probably already at a 35 to 40% of that. So there's a balance 20%. So when I'm buying property, the bank has to see that the 20% that is left with you is enough to cover the EMI. Because if it doesn't cover the EMI, as a bank, I cannot give you that loan. So what happens in such a situation? The first thing is the bank will revert to you and say 20% anyway you had to pay. You've asked for an 80%. We can't give you 80, we can give you only 40. Now that means if it's 40, you need to arrange 60% to pay. And if I could do that, I don't need the mortgage anyway.
Absolutely.
Right. So it doesn't make it a viable solution for those kind of people. The second challenge with that is you go to the bank and to get the mortgage, the paperwork involved, the checks that are done, the first thing they look at you is like you're a crook. They're only interested in how I get my money back now, not how I help you get your home. It's an uphill task.
Now, can you blame them?
Who? No, well, yes and
After
no.
all of what they went through, and I've seen tons
But that was
of
greed.
cases.
That was greed where they did not. You can have a healthy pre-qualification. They were not, because if you look at the Dubai model, how did this thing start? They were allowing it before on an asset which has not yet been constructed. In most other countries, there has to be a collateral against which I can recover.
Yeah.
There's no collateral here. It's that same sand or that which is just being built. This was one challenge that we had earlier. And you see, in a market where few banks started by taking the risk, we are talking 2006, 7, 8, that time, when they took the risk, they were getting a lot of business. Now, the other banks had two options here. Either we cool our heels and wait, in which case we lose opportunity, or we jump in as well. So that's what happened even at that time. So to come back to the point here is the documentation, the processing that you have to go through, and all of that for probably a smaller amount than what you asked for. The developer is telling you, you don't need to go through all of that with me. Can you put the 20%? Because you have to do the 20% for the mortgage anyway. Put the 20% with me. I'll give you 1% a month over the next 7 years. With minimum documentation from your side, just guaranteed through post-dated checks. And so now I have become like your mortgage person. Obviously, there's a markup on the price, but it's like an 8-year mortgage, 7-year. Yeah,
Not
so
even worth
it is easier. It is easier for the person.
people with bad credit scores, uh, can they revoke it? Can they remove it? How does it work? And usually, if it works, how long does it take?
Okay. It doesn't turn around easy. This is a fact. There's no shortcut to this. Firstly, people built up these negative bad ratings over a period of time, not overnight. It's not going to go overnight, because for it to go, you have to be able to completely pay back what is due from you, and then have a consistency for at least the next 1 to 2 years to reverse the rating. So it's not going to happen, because these people obviously do not have that kind of financial backing or funds to be able to
Yeah.
do that. So the first problem here is, how do you come back from this? One, don't skip any payment that is due. It could be cards, it could be loans. Make sure that you honor the payments order. Do not incur delayed payment interest, because those affect your scores. You're already paying interest on what you've taken. Don't have delayed payment interest. So you have to make sure you honor it. How you do it, you have to do it, and you have to do it consistently. The second thing that could help is, a lot of these banks now, their collection departments give you a payment plan. Approach them, don't avoid them. Tell them, okay, this is my situation. They will give you a plan in how you can pay it back within a certain amount of time. And I can tell you from experience, speaking with people, when you work on that kind of a plan with those banks, you actually recover your scores better than if you try to do it individually yourself. It won't happen. The only other third way is, go for a lottery, get yourself your 10 million,
Invest
and go
in
and
it.
pay that back. But it's a slow turnaround. There's
Doctor, I
no
just
shortcut.
want to tell you about a scenario. Okay, so someone is a decent person, they've never faulted. Out of nowhere, his company went bust.
He loses the job.
He lost the job. He went to the bank and he said, guys, I lost my job. And it took him 3 to 4 months to find something decent. In between this period, would this put him and give him a bad credit score?
Yes, it would.
Even if he showed all of the proof that it's not him defaulting on purpose, the company went bust.
Okay, even if the company went bust, firstly, the credit score rating is not determined by the bank. Okay, it's the central bank, and the central financial institution does this. It's not done by the bank. That is the reason we're saying, when this happens, go up to the bank, see if they can give you a deference of a couple of months or things like that, for which they'll charge you an extra thing. When you do the deference, it will not affect this. So when people don't do this, it does affect. Because the other problem is, when you lose your jobs, things like that, or the company's gone bust, I tend to use my credit a lot. Credit cards, I max out on all of these things. So that creates a major issue for you, which is the reason why find companies that can help you with the payment plan. But there's not much you can do. At the end of the day, it's borrowings. Whenever you're borrowing, there is a risk attached to it. So unfortunately, the banks, the financial institutions do not ease up on what they're doing just because you lost your job. Imagine the consequences to the financial system in your city or country if you were to do that. However, certain cases, there have been proactive measures. COVID was something that hurt the whole world. So there was a request not to.
They deferred the
Yeah, they
payments.
deferred it.
There were
That's
lots
it.
of stuff.
Yeah, so but those were global events, and an entire city went down.
It's a force majeure.
When the floods happened, again the request
They
was made to the
deferred it, yeah.
banks, right? But that is not an individual. That is a whole city.
Yeah.
So it's a completely different game.
I want to ask you something. I've been living here for the past 10 years. I've never took a loan from the bank or never used the bank.
Good for you.
How can I know my credit score? Is there a website I can put my name, check
Yes,
it?
actually you can. You can, because your credit scores can be seen even through your own bank. You have a wealth management advisor. They can find it out for you. Central bank can also, you can get on.
Even though I've never got a loan or anything in my life.
Yes,
I
because
just
you will
have running accounts. That's it.
you will have a very healthy credit score in that case. Very healthy credit score, which is perfect for you.
Okay, so now can I, every time I'm meeting a buyer, can I ask them for their credit scores? If their option is to pick up a mortgage, shall I, during my qualification, tell them, please provide me with your credit score before proceeding to anything serious?
I think it is something that is worth doing, and I think you should do it. If you go to the West, They ask for it.
Yeah, like now I ask for proof of funds regardless if it's a 2 million or 100 million. And
Yeah.
if anyone doesn't want to provide it, I'm not even bothered to go for
Okay.
reviewing.
Proof of funds is not the evidence of a good score, because I could be partnered with somebody who's going to fund this purchase.
Yeah.
So
No, don't get me wrong. I'm saying now I ask for a proof of fund before doing something. But later on, if I have a client who's looking to get a mortgage, I should ask them,
100%.
give me your good credit score. Because if you had bad score, why would I go turn 2-3 weeks to get you properties and you're not even
You're
gonna
not
be
gonna-
approved?
yes.
Yeah.
Yeah. So the banks are anyway doing it, right?
Yeah,
They're looking
yeah,
at
yeah.
your credit score. In the West, actually, people do this a lot. In the US, in Europe, they actually ask for the credit scores, which I think you pay a marginal amount and you can get your credit score. In fact, it's good, because if you ask for that, you're right. You don't waste your time with these kind of things. I'd rather spend that time with another person who was willing to get it.
Who's qualified to take a
Yes,
mortgage?
but only bit of advice I would give here is people don't like the question being asked to them, especially when you are operating in a market where this is not normally done. See, if you were in the US today, people understand it's part of the norm, right? Canada is the same, so people won't worry about it. But here they take a bit of offense to it sometimes, like, you're checking me out, okay? So I think you could ask, but you could do it as a third party approach. Most of the clients I work with usually provide me with a credit score to show me that they have the funds and that they are credible people. That's the reason why I've been able to find them the home of their dreams. Would you be willing to share yours with me? Go third party.
Would you billing? You gave him an option. It's like, when can you share?
Or when
yours?
can you share? Either one. When can you share? But third party, I find they accept it better, because you're saying a lot of the clients I work with actually share that, so that they build confidence with me that I'm spending my time finding the home for someone who's credible.
Are the banks still holding on the equity release?
I am not aware that they are holding it here now, but they have to start opening out again, because the market is huge. Imagine the number of units coming out into the market. 110,000 units are going to be released between 24 to 28. We've had nearly 160,000 units that have been launched right now, which is not in this 110. So it's there. It's a huge business opportunity. So I honestly don't think holding on to it is good for the bank.
Okay. We are coming to the summer period of Dubai, where following the rhythm, it kind of slows down a bit from the winter, because most people, they like to travel, they like to go back to their home countries. If they're from Europe, Europe is going to be the best place to spend the proper summer. What kind of an advice you want to give it to brokers to benefit and utilize this extra free time that they have in hand?
Okay, I would go a little backwards and then come to this. As a broker, you have to be long term in your vision. Okay, you work on a plan year on year. You don't work week on week or month on month.
Yeah.
So, some cases you could have, if you have been aggressive in your Febs, Marches, and Aprils with talking with people, particularly international buyers, there is a very high probability there are many of them who would actually secure units with online transfers. Today, people have become comfortable with online transfers. They don't physically need to fly into the city and buy. This works obviously in the off plan, not in the secondary. So there is the opportunity that you could have done to be a little bit smart, since people are not going to come in. Start working with people. Use your pitch in such a way to help them understand why there is a consistent rise in online bookings which are happening directly into the portals of the developer sites. So there's no cash flowing somewhere else. That confidence is there. So if they have worked on that, if they built that strategy in March, April, and probably say May, they can have a bit more business than they would have had if they were simply waiting for a person to come. That's one. So which would mean a lot of Zoom meetings, third-party presentations could have been done. Now, coming into the actual summer, it's your preparation for after that. So all you need to do is build your relationship with your clients, constantly educate them, give them an amazing property monitor report, which comes out, it's freely available. The April report just came out, brilliant report. Keep feeding people with information, keep them alive. That is to work on people so that they are ready to consider coming once the weather changes. You have to always manage your pipeline into the future. For themselves in particular, now is the time, get yourself into learning. Sit down and review. In the last 100 meetings you had, what went wrong for you? What did not work out? Pick up some skills, learn. Today, everything is available on the internet literally for free. So do that. Start going back into dead leads, into the, I don't know, your recycled ones or what have not been. Just start engaging in conversations. Keep your time productive. Salespeople can get rusty very quickly. When you go into holiday mood, you're not going to be able to do anything. Don't do that. You have not yet reached that level where you can take the break. So you need to keep doing this more and more. Work on creating new presentations, new pitches, start signing up with agencies, have partnerships with people in different parts of the world. I'm getting zero money from that client anyway. Let me share it with you and make something. But I think it is a great time, I would agree, where they can start to take stock of themselves and really develop and grow to the next level.
Reflect, plan, execute.
Find a mentor. Find mentors. There are plenty of them.
That's the mentor. Say, find mentors. This is the best mentor on the planet.
I don't have time for that, but okay. But find a mentor and get into. There are so many forums here. Do some networking. Pick up a skill. One thing I will tell you, and I think this you cannot lose on this, and I'm not promoting them. Toastmasters. Toastmasters is in about 170 countries, and they are like literally over 100 years old. Perfect place to go and enroll. Okay, go to Toastmasters. They've got chapters, different clubs. There's one in Dubai Marina. There's one on Sheikh Zayed. They're all over the city. Why should you go there? They teach you how to pitch and present, body language, tonality of voice, framing of sentences, creating unconscious patterns. They will make you into a powerful presenter, and that naturally builds your confidence. And when you are presenting with people, you know how to present in a more effective way. They will teach you left brain, right brain, some of the clubs. They will also help you to handle interruptions, disruptive audiences, hostile takeovers of when you're presenting. They'll give you all these techniques. You can go and you keep practicing, and the previous winners are there. They genuinely give you feedback. You're in a fraternity. Also, who do you find there? Vice presidents, presidents of companies, CEOs, because these guys, they can handle companies worth hundreds of billions of dollars, but put them in a room with 50 people and then he starts shaking. They can't speak. So you will see many of them there because they understand, the senior level executives, we need to pitch and present globally at conferences, selling my own annual business plan upwards to my board, sharing with the company the new strategy. So they need strong presentation skills. You will immediately have common ground with them because you're a Toastmaster, I'm a Toastmaster. You can grow and they can open channels for you. Toastmasters is something I feel every person who's in sales has to become a member of it.
You should make a disclaimer that you're not part of this business. It's not paid promotion. It's just your own personal opinion.
You've just done the disclaimer for me. But no, I say this to a lot of people. And why not? We are ambassadors for our city. If there are companies who I think are doing really well, why not highlight it?
I remember when I came in the city in 2014 and people were saying to me, you should do prospecting. I'm like, how? I don't know anyone in the city. And back then there was a popping application. It was called Internation. It had the Dove logo back then, so I joined it, and we remember we were going to GLT, meeting people, having food and stuff and bit by bit I got actually proper connects from there that I build on sales. So there's lots of places that you can prospect in the city. It's the most lively city on the planet. Yesterday I was sitting in the garden and looking up the sky, and I just noticed that I'm seeing planes landing every 3 minutes. I'm seeing planes coming from where I live. I'm sure maybe it's maybe every 2 minutes there's something coming. So we are living in the most lively city. This city doesn't sleep. There's so many people coming in and out. All what you guys need to do is make connections. The more hand you shake, the more money you make. Doctor, thanks a lot. Oh, sorry. There's something, please.
Work on your social media. Not you. Them. Okay. I think we are active enough. And look at what's happened. The popularity, the reach, the people coming. They need to do that. So you have these summer months. Start working on it. I don't know, you got friends who are in media, sit with them, talk to them, look at some of these. Look at a Farouk from Springfield. I don't mind saying it here. Look at Anthony, look at yours.
It's not paid promotion, it's just personal opinion.
I mean, look at these guys and see what they have done to their own image and their reach and their credibility. Tomorrow you have clients who are talking to you, give them a link to it. Tell your client, Mr. Investor, the first thing I believe you should be doing is evaluating if I'm the right kind of broker or salesperson you should work with. Let me send you a link to my Instagram. Okay, have a quick look at it. I'll give you a call back in half an hour.
You know how many agents text me and say, we shared the video of you and Dr. Anand and we just sold this property?
Yeah, I've had people from the developers who have called me. I won't take this name here. They said we shamelessly use your videos, close the deals, and we take the commissions. But then that's okay. It's working for them, good for them.
Doctor, thanks a lot. Another beautiful episode. Thank you all for watching this one and see you in the next one.
Anthony Joseph, Prime Stay, Holiday Homes. Most awarded agent in Dubai, his name is Anthony. Portfolios he's scaling really high, that's why they can't